So you guys should know already how we determine high and low probability market conditions. This is something that we can do by literally just looking at one candle, right? So here, this candle, which opened at 9, you guys can see that in the S&P 500, it's a down candle so far, right? So this candle so far is just given bearish price action. The same for the Dow, but for the E-mini, we have a candle which is bullish. That alone, right? This price action right here is the price action which you would like to stand clear of, right? This price action destroys accounts. You do not want to be trading during this type of price action. On a regular day, the best type of price action, right, would be trading during symmetrical market conditions, not during times like this. So I was watching the market for around since I'd say 8, and I wanted to come and go live, but I saw things hinting to this right here, which would leave many of you, how would I say, flabbergasted, confused, right? And it's fine to be confused sometimes, right? This will happen. It won't happen a lot. It will happen. And when it happens, you shouldn't be, thinking that they're going to change the algorithm or they're going to, you know, change the way the market functions. There are just times whereas, before large price swings, we have to have things like this happen. If we zoom out, you can see the chop right here, S&P 500 and the Nasdaq. The forex market does not look much better. I'm looking at all of those markets right now. Multiple screens, you're just seeing one. No. Anything here which would push me to risk money. No. Not at all. Nothing. Which is fine. So we have the US dollar falling. We have the euro, going higher. Same for the British pound right now. In regards to, the intraday and intra-week price action. These weeks, right, should not deter you from, trading or, allow you to change your strategy. If you had something, that was working over, a period of weeks, months, and just because of 1 week or two, you shouldn't change that, right? You shouldn't change that. During range and price action, low probability conditions, which we have when we have less than, 4 red folder news event. So if there's three, there's two, you're going to usually have price action like this, right? Or if it's a week of, which we would refer to as a joker, or a blank week, or week one, which it's currently week one right now, right? It's Q1 in regards to the monthly cycle, which is the first full week of the month. So we still have the Dow, reaching for its drawn liquidity, which is why we were mostly focused on the Dow, right? The drawn liquidity for the Dow, you already know, is here. So this is the drawn liquidity for the Dow. The E-mini is lagging. The E-mini Nasdaq is lagging. This low right here, stay slow. Liquidity above these highs. And liquidity below this low. And here, let me 1 hour time frame, so we need a daily PDA. Now, if we should see price side, we have a fair value gap here, a volume imbalance here, and a inverse fair value gap right here, which would look something like this. Also, liquidity above these highs, right here, a lot. And I am talking about the S&P 500, of course. Don't try this at home. Position selling point. Will this live stream be uploaded? Yes. So right here, right, this we see this rally right here. This is a micro SSS SSMT, right? Which is why you had this slight rally of price or this pullback. So we have liquidity at these lows, right? And this is what would make this a low probability condition, right? Due to the fact that we have liquidity here and here, right? Also, we had, you know, as we said first, the Nasdaq dropping while we had the Dow just rallying, literally doing the opposite things. So meanwhile, I'm looking at this candle right here. I'm actually tracking the amount of time which is left, in regards to this candle. So right here, we have 25 seconds until this 5-minute candle closes. So far, price is still, more prone to short to these highs, even though we have this. Why? Because we had the Nasdaq, right, taking out this 90-minute cycle's low, right? Yeah, this is trading, right? Well, without the emotions. Tape reading for you. So the news this morning didn't do a lot, but it did, cause this, what they call this, crack in sentiment, which, occurred when we had, the Nasdaq and the Dow just going in different directions. Then now we see we have no engineered volatility until 1:01 p.m., which will affect the bond market more than anything else. It's the 30-year bond auction. When we have price action, we have a draw on liquidity, right? So we started the week looking for the Dow, to go to 39,369, right? The draw on liquidity does not need to be met, for profitability, right? You just need to be trading in that direction, because there are times when price just won't get there, or it will be going for here, but it might not get there during this week. Here again, extremely slow press action. Yep. And this is why we only trade whenever we have news events, which are always classified as high probability days, right? Always classified as high probability days. And that's literally just due to the fact that we know when to expect volatility, right? So pretty much just waiting to see price, you know, do what we expect. This right here is the 5 minute time frame, right? So even right within these candles, you could find scalp entries, right? So what did we highlight here, right? First of all, right, this right here is a two-stage sequential SSMT, right? We had this, but this is a micro setup, right? This would be micro. Very low time frame. So here, well, here we had the low of this 90-minute cycle being taken out, whereas it wasn't taken out in regards to the S&P 500. So the Nasdaq took out the low of Q2 of the New York session, right? Then here, what do we have here? What did we have? Here we had a lower time frame sequential SMT, which was, lower time frame than the 90-minute cycles. This is the microcycle, right? This right here is the microcycle. And then here we have price going to our target right here. Can take this away. Final target would be here, buy sell liquidity. So remember the wicks or gaps, right? So right here, where is it? Right here where we had price trading into this wick, right? I would classify this as a gap, right? I do not differentiate between, wicks and gaps, really. So here, where we had price trading into the wick, right, and right here is literally, well, basically in the formation of this candle right here. You'll see when you watch it over, right? We wanted to see price above these highs, right? And even though we did highlight that this is not high probability price action, which shows you that it still works, even, in low probability price action. Why? Because what you should look for was there. The draw on liquidity was there. The cracking correlation was there, right? And then here, what do we have? And remember that we highlighted the precision swing point as well, which was on the 5-minute time frame. And then there we go, right? And then, yeah. Here, we had the SMT fill, right? So this was an SMT fill, whereas we had this candle fail to go into this gap, whereas we had this candle, trade within this gap, right? And remember, we don't differentiate between gaps and wicks. On the 5-minute time frame, this is the candle that we highlighted, right? As the precision swing point, right? And precision swing points, they do not need to be, right? Well, within both of the assets, they don't have to be the lowest closed candle. What do I mean by that? Right here, we have this being an up close candle in regards to the S&P 500, but for the Nasdaq, this is a down close candle. Due to the fact that during the Nasdaq, right, this was already, right, this is a swing point, a classic swing point, a precision swing point. This is not. And, we will go over things like this. So right here, we had live, a cracking correlation between what? Swing points. And, this one happened to be a precision swing point at the same time. A lot of light bulbs should be turned on for you. But we will, go into greater detail of that. So what would I say? to go over everything that, we saw pertaining to this happening, right? Turning to price, going to our drawn liquidity. What were we looking for? Well, or what was there? The first thing is we saw this, right? Precision swing point, right? That was the first thing that we saw. That was the most important thing, which led to this right here being important. We had the NASDAQ, right, taking out this 90-minute low. And remember, this is low probability due to the fact that we had the Dow just doing its, what it's doing. And whenever the Dow is doing stuff like this, what do you focus on? The NASDAQ and the S&P 500. So literally, you would just be looking at this, right? So we had the NASDAQ take this low out of this 90-minute cycle, which was the second quarter of the New York session, right? Precision swing point formed below, right? We had a close above this candle. But what caused the precision swing point to form? On the 1 minute time frame, right? After we had this correcting correlation in regards to the 90-minute cycles, we had, during the microcycles, we had another correcting correlation, right? And this two-stage setup, it is fractal and it will always be repeating itself. So I hope that you learned something from this. And we will be back for sure this Sunday. I am not sure if I can be back Saturday, but I will try. And I want to have more, live streams like this, right? And if you wish, I believe that I could, go over this, in, what would I say? Well, this is already real time, but, in hindsight, since, it's more difficult to, for people that are, learning, it's more difficult to, pay attention or, what would I say, not doubt the setup or the price action or whatever you're looking at in regards to the charts, right? In real time, due to the fact that, you don't have enough experience with it. But for sure, you could go over it in real time. Well, not real time, in hindsight, looking back. Which is basically, everything that you have been, learning, coming together over the past few months. So if you're here and, you saw this happen, right, live, and you saw everything that we talk about just coming together and allowing price action to, turn around, even if it's not a huge move, it's a low probability day, but, the setup, if you took the setup, it would have given you, at least 3 hours, right, with minimal drawdown. So I hope that you found something useful from this. I hope that it helped you in some way, and we look forward to doing more of this. Have a wonderful day.